What's going on, traders? Welcome back to another live stream. If you are new, my name is Zach. This is Real Deal Futures. Before we get started and bring on special guest MLT Eric, make sure you read what's on the screen. Trading is risky. Most traders do lose money. I'm not a financial advisor. I do not provide financial advice for entertainment purposes only. Make sure you do your own research, make your own trading decisions. Read CFTC Rule 4.41 on simulated trading, which is what this is, even in funded prop firm accounts. And the affiliate and partnership disclaimer that says I stand to make money from links and codes in my content, like Top on Futures, code RDF, Bookmap, Edgeful, and others. Chat, what's going on? How we doing this morning, guys? Dwayne, what's going on? Glenn B, Pam, Dr. AK, what's happening, guys? Alan, what's going on? Time Pass, what's happening? Sure, we got the OGs on kick as well. Jess, Kobe, Slothfather, usually you guys are on there. What's happening? What's happening, chat? We got a guest today, another awesome special guest today, Major League Trading, aka MLT Eric. We'll bring him on, see what he's looking at in these wild, almost runaway markets. And I'm watching YM push the highs right now, trading 49,538. But let me go ahead and bring on Eric here. What's happening, brother? What's happening?
What's going on, man? Thanks for having me.
Appreciate you hopping on the show, man. Appreciate you joining. It's been awesome to get more guests on, more perspectives, more trading styles. Markets opening up right here, right now, 9:30 a.m. Eastern. What my community's probably tired of hearing what I'm looking at, which is YM. We were talking about that into the open. What are you looking at today, man? What are you looking at in these markets that are taking off to the upside here?
Yeah, so at the moment, I think, you kind of hit it on it. Like, we're potentially a runaway market. So for me, I would love to see the S&Ps pull back into 69.33s. It's about 20 points lower than where we're currently trading. At the same time, I'd like to see NASDAQ kind of pull back somewhere around 25,600. So it's not too far away. It's only like 70, 80 points from here. We don't have any technical levels in there. And then in the Dow, like we talked about, your baby, I really can't long this until we get up through that 49,752. So we got like 150 points to go, which we're probably going to do in the next couple of minutes, realistically, the way the Dow likes to move.
Looks like we want to do it right now, man. Not to cut you off. Looks like we're trying to do it right now. Spot on. I had the we were talking about this coming into the show. I have a similar zone up here, just coming off price action market structure. So take me through that, man. You would look to long through this level once we kind of are breaking past this market structure, price action, volume, key area of interest for you?
Yeah, so for me, it's we move from level to level. So at the moment, we're coming off of a lower level, which was the break yesterday. So we had a level in place yesterday at 49,034s. So once we broke through that, the next logical place for us to go would be up here in the 49,752. So now it didn't necessarily hit yesterday, but that applies regardless until we do something and we change that course of direction. Which looks like gold actually just popped up there to 38s. So for me, like, I want to see, in a perfect world, this come up, trade through 752s, maybe up into like 49,825s, 49,830, something like that, right? And then when we pull back to 752s, or we establish some type of like 15-minute 1, 2, 3 type of pattern or something, I would like to see one of the other markets, maybe NASDAQ at this point, because that's the only one that has a 5-minute red bar here, see that making some type of new low, and that'll establish us a divergence. And then from there, we can look to take whatever the stronger market is, which in this case might end up being the Dow. We talked about that in pre-market. NASDAQ was up 0.97%. Dow was only up 0.51%, and now that's flipped. So the Dow is actually kind of gaining some traction here on the NASDAQ. And we'll just kind of have to watch that relationship, see how that plays out.
Nice, man. I love the analysis. So you trade, obviously watching all three, you trade off of key areas of interest levels, and you trade divergences between all of them. So if you can, or if you don't mind, break that down a little bit like clearer. That was really good right there on YM. But like on a day-to-day basis, you're essentially looking for one of the three to be stronger than the other two, and then look for a divergence for entry, for an actual entry model to like look to hop in?
Yeah, so actually I watch I watch all four indices. So the S&Ps, Nasdaq, Russell, and Dow.
Yep.
Um, and it doesn't necessarily matter which one is stronger, weaker, whatever the case is. I just want one of them. Typically S&Ps and Nasdaq move together, and then the Russell and Dow will kind of move together. So like if you look, even like into yesterday, right down into, if you pull up just a 5-minute chart, you'll see like right around 12:10, 12:15 Eastern time, we came down, we made new lows in all of the markets except for the Nasdaq. So when we do something like that, it's like, all right, that's and the Dow actually. When we do something like that, we have two markets that are saying, hey, no, I don't actually want to go lower here. And we have another market that's saying like, maybe I do want to go lower here, which was the S&P and the Russell. So for me, that's an area of like the analogy I use. I like to think in analogies. And it's like, if you ever go to the bar and it's like the four of you, like you always have that one friend that drinks a little bit too much and like he's trying to get in a fight with the dude over there in the corner because like he said something he didn't like or whatever. And then the other three, you got to go get him and pull him back. That's essentially the way in which I look at the divergence is like, all right, NASDAQ was drunk. It didn't really want to pick that battle. It didn't really want to go lower or higher, whichever way we're looking to move. And then from there, we get dragged back in the direction that we actually, the rest of the markets want to go, right? Which is to the next bar, if you want to use that analogy.
Nice.
So,
Awesome, man. Yeah. That's the deal. I love it. I know a lot of guys are watching for that correlation or divergence. I was talking a little bit about it with you. I'm just I'm a little bit maybe too slow on it, or I've just watched YM do too much and been burnt trying to get them all three to work together. I'd be lying if I said I didn't have a trade view chart on another screen, right, with everything running on the side, taking a look at where everything's at, just so we could see, if everything in its, in the market's selling off. I probably want to know about it before looking long, as YM's cracking to the upside, maybe just off the open. But it's awesome to hear, man. Awesome to hear. So for your levels, because it was cool to hear that you had the 49 750s or 752. Awesome. How are you identifying? I was gonna say it's cool to see that I had a level really right there as well. It's the kind of top end of my zone, little discretionary markup here. How are you identifying areas of interest across these for your charting?
So for me, I don't use any kind of indicators or anything like that. Like everything is purely based on the chart. So like at the end of the day, I view whether it's like RSI, MACD, whatever, anything in which you're trying to get to plot some type of indicator on the chart, if you will. At the end of the day, it's all based on price, right? Like if price didn't trade there or price didn't do X, Y, Z there, then like that thing wouldn't make a squiggly line there, right? Or whatever it is. So for me, it all comes down to price. And where I draw levels from is specifically just the hourly chart. And I have a set criteria or rules based around trend and things like that for why specific areas become levels and specific areas don't. So it's just pivot areas, right, where we've reacted to in the past, like on the left of the chart. And then those become areas where we can, obviously to the right of the chart as we're moving, potentially look to do something from or see reactions from there again.
Nice. Okay. Clean, based off of price action, market structure only. I love that. I'm in agreement, right? Indicators are all going to be a replotting or a different display of some combination of price, time, and volume. There's really nothing else that they're going to add in there unless you get into like order flow tools. But, I agree. So how much of that do you need to identify what's already on your chart, which is price, right? So I love that, man. Off of the 1 hour, I think higher time frame stuff, really, really clean. And, I move somewhat similarly, right? Price action, market structure, and some volume profiles. But even when I talk about volume profiles, I'm always the first to say that volume profile wouldn't be there if price wasn't there, right? Like if there's no consolidation and price hadn't traded over here, and put all of this price action up here, there wouldn't be that volume there, right? So maybe you get a little bit difference based on how much volume is traded at these levels. But for the most part, it's really an overlay, right? Those volume profiles, right? They're usually not in random spots. You can point out, where that volume profile is going to be on a chart pretty easily based on the price action, right? The price action for that day. Look at how much we traded up there, that type of a deal. So I like that mindset, man. I think indicators can be super helpful if it's something that you build trust in, or for some reason you really like the way that that's displayed. But I think it's really important to recognize, like, it's already there. It's already on the chart, right? When you open up TradingView, all the info for that indicator, like the stuff behind it, the math that it's using to get calculated, the data, it's all there. It's already on the chart. So it's
Yeah,
I think
for sure.
important thing to remember.
So I had a guy back in the day. He used to tell me that a chart is nothing but a two-dimensional way to display time and price. Like, at the end of the day, that's all it is. Which was kind of funny. You hit on that. Time, price, and volume that's essentially it, right? That's all we have.
Yep. That's it. I used to it was helpful for me because I used to be the indicator king, constantly overlaying everything. I was talking about this yesterday with Drysdale, where, like, you could hardly see. I joked around a little bit. He had quite a bit on his chart, but he broke it out into four different layouts, and it wasn't as bad as what I had or what I've seen from others. But if you step back and you realize, like, this is just more of the same. It's displayed differently. These levels can come into play. They can be, important areas, like a VWAP. Obviously, I like VWAP. A lot of traders trade with that. But you got to remember that stuff's already on your chart, man. It is really just an overlay. So yeah, I'm watching Dow pop to the upside, trading to the 60s here. Yes, for my community, guys that are on, I know I didn't get too much analysis. I'll do a little bit of review later on. Kind of my frustrating day yesterday. I've had a lot of frustrating days, but for this market, man, really bullish overall, right? Obviously, cracking prior day's high in pre-market, opening up above yesterday's high after a really aggressive push. We've got a fundamental driver there pushing us to the upside as well, filling this gap. For me, I'm not looking to aggressively short this. Sometimes I'll take a mean reversion style trade. Definitely not the play as we're going to push towards all-time highs here, at least for me. And this is exactly what me and Eric talked about into the open. This might be a tough trade because oftentimes if the market just rips off the open at 9:30, if you're not in before the open, into the open, it gets really difficult to structure risk on something like this. And my comment was, if I was going to be in anything, it'd be long with maybe a stop loss way down here before before Asia London lows. At this point here, I'd be looking for some kind of a pullback. I don't know that I'd be really comfortable if we just completely pulled back down here, hit VWAP, tested prior day's low. I might look for something really aggressive for a continuation on that. I really don't see a short play for me here at all today. I do not want to step in front of this. For longs, I'm going to be looking to buy some kind of a dip, aggressively buy a dip. Honestly, I was hoping that we got the black sheep. We got it on NASDAQ today. It looks like it sold off a little bit into the open. Yeah, I was kind of hoping we got this on Dow, where I'm bullish overall bias coming into the open based on price action, market structure, volume. Based on the overnight session where we're opening up for, relative to yesterday's volume profile, yesterday's daily candle, I want the buy. I would love a buy down here. I would have loved a buy down here, really aggressively cracking down below overnight, Asia London lows, maybe testing yesterday's value area high. Kind of the top end of this range would give me a really nice way to structure risk to say, hey, I want to run this to the upside. If I'm wrong, I'm absolutely dead wrong. We're selling off super aggressively. This is, not the move that's going to continue like it is so far, but didn't get that. We got a real aggressive crack to the upside here, traded all the way to the 64s, 49.764s here in YM. Interested to see where we go from here. I think this is going to be a little bit of a patience test for me, at least for now.
That it's going to be. Unfortunately. So what I'm seeing at the moment, which we talked about in S&P, is looking for a pullback to 69.33s. In the Dow, we've popped up. We traded that 752s. We pushed through, 10, 12 points, whatever it is. And we're starting to come off that level a little bit now. So we're like scenario number one I had where we would kind of hang out up there, maybe go sideways, get a little bit through it. and then we would see NASDAQ come down, make those new lows, and then we could buy off 752s. That idea is obviously scrapped at this point, right? We haven't been able to meet that, step-by-step process. But we are making new lows right now in the S&Ps and in the NASDAQ. So we weren't making new highs here just 3 minutes ago, realistically now, in the NASDAQ. So we had Russell, S&Ps, Dow making new highs, and NASDAQ was the laggard there, which makes sense when you look at even the first 5-minute bar of the day, right? It's a red bar in NASDAQ. So my next trade in which I'll be looking for, that Dow setup is still technically valid if we can get back up through there. If we come down and we break new lows, that kind of changes things just a little bit. But I think we might have to do that in order to get the S&Ps to pull back into 69.33s now, right? Because the Dow couldn't really hold that strength. Like we talked about it in pre-market, it's done this where, like last Friday, we rallied up, 160 points right off the rip, and then we faded it all back and even then some on Friday. So we might see something similar to that today. But like you said, it's definitely going to be a patience tester right here. The one thing that I do like, and I'm debating if I really want to wrangle with this today, is gold. So
let me go ahead and pull your chart up, man, if that's cool.
Yeah, it should be up.
Let's see. Yep, you're good to go. Let me add that one on there. Yeah, you're up.
Yeah, so with gold here, I had a level in place 48, 38, 40s. And you can see we pushed up through that, and then we've now pulled back, came back and tested. This is technically the overnight open, but it's not really the open and watch. I just have the extended session on for this chart. And what I like about the potential here in gold is just the room it has to 48.91s. So this was an overnight high from yesterday morning that we've never traded. So when you look at, I like to do like kind of compare and contrast type things, right? With the idea of the divergence and all that. When you switch that over and you look at silver here, you can see, if this will stop doing its thing here, you can see that silver actually didn't get the high as 1 day back even further, right? So yesterday silver was fairly weak, wasn't really able to even push up through in the pre-market session and get that other high that's back over in here. And then now we're pushing up through the level in which we have in place here, which is 94.08s. And it's like, okay, we now may have gold and silver moving together. Like both of them are kind of a little bit lockstep here this morning. Now, silver is a little bit stronger. It's up 1.6%. Gold's only up 0.12%. So silver could be leading that charge. But if we get both of them moving together, then I like that long idea even better.
Okay. So might run something on the metals here today.
Potentially.
Nice, man. Nice. Solid analysis. Listen, it makes sense to me. I think I really, being honest, I really have never been able to effectively wrap my head around correlation and divergence. I watch so many other traders do it. I'd probably go out on a limb and say majority of traders are going to have multiple indices or markets or, even Mag 7 pulled up if they're trading NASDAQ and they're using that correlation or lack of correlation within their trade ideas. Maybe I'm just too slow on it, man, or I haven't worked at it long enough, but it's definitely been a challenge, but it's awesome to hear someone who trades so many different markets as well, right? Because, we were talking a lot about YM, but you'll essentially trade whatever the setup is on, right? Across NQ, ES, gold, silver, Russell, or do you have a preference to like be entering and exiting on one that you're waiting for that divergence on and a level to be hit?
Yeah, I mean, it's not my favorite thing in the world to have, like an indices position on and a gold position and like if I've got, 3 or 4 different names on, like that can typically be a lot. But like, yeah, I don't necessarily have a problem with like, Dow might make the new low or the new high or whatever, but the trade's technically, in the NASDAQ or the S&Ps, for example. Like I don't have a problem with, that's kind of the whole idea of the divergence in and of itself. Them all being the indices and essentially holding the whole basket of stocks of whatever across the board. I kind of look at it as like boats in a harbor. is like when the tide comes in, they should all rise, and when the tide goes out, they should all fall together. So like they should move together, and when they don't, or when they present something that's different, that's where the opportunity for me lies. And those are the things in which I'm waiting for and watching for to set up. And we might see that. We're getting that pullback into 69.33s for S&Ps. The big question is whether we're going to hold or not, right? Like we could technically fade off that 752s for the Dow, which could cause the 69.33s to fail. But we're going to give 69.33s a shot first, right? Just like we gave 752s a shot to get through.
Yep. You look at how clean that markup was to the upside on on your end for the 752s. I'm looking at it on ES as well. I see, if I had to draw a zone, if I had to draw a level, it'd be right there, looking left on a higher time frame. But no, man, it's cool to hear. I don't think I find as many traders that will enter across so many different instruments, right? Just based on what presents for that day. Most guys are like, they're NQ, like all day, every day, but they're going to use, 47 other instruments as kind of correlation and some confirmation. So it's cool to hear somebody that's more flexible on what they're going to trade. It's probably pretty cool for finding opportunities. I'm assuming you don't go too many no trade sessions having the opportunity to trade across so many different markets.
Yeah, typically not. I mean, unless we're super range bound, there's typically going to be something to do. Now, like with the current charts, this would obviously look a little bit better to me, which we just traded 69.33s to the tick there on the S&Ps. So like that level's been hit. It's now valid, right? This would look slightly better if, say, the Russell or the Dow didn't break these morning lows, because then that would be, S&Ps would be that drunk dude at the bar, and the Russell and the Dow are like trying to pull him back, right? Yep. So what I'm going to be looking for now is from 69.33s, let's see if we can't get a little bit of a rally here. Nothing too crazy, maybe 69.40, 69.42s, give or take, right? That part I'm not necessarily too worried about. And then if we can come back down and at this point now make a new low in something like the NASDAQ and something like the Dow, and the S&Ps are holding this 69.33s, then from there we'll have our divergence, and we can step into the long side. And essentially targets in here, first targets would be 69, 64 is basically back up to highs. So we've got about 30 points worth of room, give or take, depending on where, if we do rally up here, pull back, where that entry ends up being at. So if we can find something with a 5 or even 6 point stop, we're still right in that wheelhouse, of a pretty decent like 5 to 6R risk to reward ratio trade. And it's like, okay, that's something I want to take. That has my interest. If it's a 1-to-1, if it's a 2-to-1, it's not necessarily as interesting to me, right? I want the bigger target.
Gotcha, man. That's interesting to hear as well. Running the higher risk to reward, pretty tight stop, a couple points in single digit points in S&P, man. That's pretty sweet. That's pretty sweet. So you would, I'd say, would you, maybe let me ask, not I'd say, would you classify yourself more as a continuation style trader where you're trying to run with the trend of the day, with the more immediate trend, or do you find yourself right? Because I mean that's not the reversals. We're not picking the top and the bottom. Maybe you're waiting for that pullback, and then you're buying on some strength out of that zone as well. Sounds like you wait for a little bit of a, like you were saying, a rally on ES with the other ones, pushing a low. ES is holding, and then maybe you're going to look to enter on a bit of buying pressure out of a zone. Is that fair to say?
Yeah. So trend is definitely my friend. Like I'm not really trying to fight that. Like today, the Dow, I'm not interested in shorting that off 752s. The weekly, the daily, everything else is in an uptrend, right? When we start flipping those smaller time frame trends, meaning like 15-minute, hourly, things like that, and we're at an area where the daily or weekly could flip or fail, then in that case, you might consider me like a little bit of a counter trend trader, right? Because if we get a divergence at highs and markets getting ready to roll over on larger time frames, then in my case, I'm looking at that as going with the trend of that higher time frame, right? So yeah, I might be shorting. Like technically yesterday we shorted off of in NASDAQ, we had a level up there at 493s on that first morning push. Is my chart still up? Yeah.
Yeah. Yep.
I'll show you real quick. I don't know. Do you don't use Thinkorswim, do you?
No, sir.
For some reason, whenever I use like StreamYard, my charts on Thinkorswim have been super slow to move for some reason. There we go.
See, we got MLT gang in the chat. What's going on, guys? Appreciate everybody that's hopping on from the MLT gang. What's going on? Dwayne got short on ES. You're a brave man, Dwayne. Brave man. 312. Nice. Very nice.
Yeah. So if you see this right here, right, like this. So we had a level in place at 493s yesterday. We traded 494 quarters on this high tick, right? I ended up trying a short right in through here at 451s, and I used a rather aggressive stop. I didn't give it all the way to the highs. I gave it 76s, and we ticked it and traded 78s right there and ticked me out of it. So I missed this move to the downside. But it was a 25-point stop, which my targets were technically down through overnight lows and then 941s. So I had a 25-point stop for like a 510-point target. So like it was a good 20 to 1 risk to reward ratio. And that came from a divergence. Like if you look specifically at this moment in time, which was 11:12 Eastern yesterday, and you look at the S&Ps or you look at the Russell or the Dow, the only market that made the new high was the NASDAQ. And it wasn't by much, right? Like we popped it by like 8 points. So it doesn't have to be a ton. It can be one tick realistically.
Nice. It's interesting, man. You're running for what I would consider tight stops and wide targets, man. It's pretty sweet to see somebody run that level of risk to reward, man. Do you find you end up with a lot of those, small stop outs and then just the massive winners that are going to carry something like that over 10 to 1, risk to reward? Is that kind of the equity curve that you work with?
On that type of trade for sure. That's the main focus is if I can, and even if I risk like a fraction of a normal R value, if it runs for 10, 20 Rs, I'm still up like 3, 4, 5 Rs on like what would be a normal full size position, right?
Yep.
And then varying that size a little bit allows me to then obviously be able to hold that position a little bit better and things like that.
Nice. Yeah. So it's a combination, right? And that's the other layer to this, right? Combination of dynamic sizing, position sizing relative to what you think the potential for that reward could be, right? The profit target. So no, that's sweet, man. Probably also protects your downside a bit because those are going to be maybe lower hit rate trades, which is fine if you're going to shoot for something that has a really, really, really big return like that. But I think that's really cool to hear as well. Like not only adjusting stops and take profits relative to what's going on in the market, but adjusting actual position size and risk per trade based on what's available, how tight that stop is going to be. It's definitely not for the inexperienced to do because I think it could start to get inconsistent. But man, it's such a power play to really be able to size into opportunities that make sense, to get your stop in an area that makes sense, or even size down where you have a huge opportunity to the upside. But maybe you say, I got to run a really tight stop on this. This is maybe not, I don't love to use the word probability, but not a really high probability trade because, we're bullish on the day, whatever it is, we're coming out of consolidation. But if this goes, this thing's really going to go. So I want to put risk on, and you could do that in a way that makes sense. So that's sweet, man. That's awesome.
Yeah. So like right now, not to cut you off on that.
No, go ahead.
Right now, we just popped these lows, right? We traded 3250s there in the S&Ps. And we did not trade new lows here yet in the NASDAQ or the Dow. So I'm kind of keeping an eye on this here to see whether or not we're going to end up holding this 6933s or not. And I kind of like the Russell a bit more right here, potentially pulling back towards opening print because that's the one that got the really nice reaction there. And we'll see if we can't find some sort of entry in here potentially for a long. But I think this has the potential right here to turn into, if we're going to hold on the day, somewhere right in here is going to be that spot.
Yep. Yeah, I'm looking at a long on Dow right now, man. I said I wanted to buy a dip. I don't love that we blasted off and are aggressively back right down below VWAP right here. But my thesis is we're either going to hold this area. I would say even into like the 440s. So I'm a little bit opposite on the risk to reward side. I run a really wide stop relative to the stops that you're going to run, and I'm a pretty modest on the risk to reward side, really closer to that 1-to-1. But my thesis here, only because it looks like this is going to be my only opportunity, is either we're going to hold here right off of VWAP right into the highs of yesterday, these 49 480s. Maybe we try a dip lower into like the 420s, 430s. Like I'd be okay with that. I think if we give that area up, we are not going to hold, and we don't run all the way back through, the 749. What do we put in here? 766, 767s. So I'm tempted on the long here. I wanted to just give it another second down here, but I think I'm going to run this one long right in here from VWAP. Let's see if I could just wait for a little bit longer, a little bit better of an entry, one more dip down as we open up for 10 a.m. Try not to jump right in too super aggressively. I'm going to give this a second. Give this a second here. Got some volume coming in. And we got some 10 a.m. red folder. What is this one? Let's see. Yeah, core PCE price index. Yeah, if it gives me these 430s, 440s, I'm gonna try this bad boy long. I'm not gonna take a short today. I don't have it in me to fade this type of market at all. I think we could totally roll over. That could have been the really aggressive short play. But yeah, we're holding up here. I like this one. I'm running this one long. Let me pull my chart up here.
We got S&Ps and NASDAQ. S&Ps and NASDAQ new lows. Russell and Dow did not here. So I'm more in favor of the Russell and the Dow at the moment.
Yeah, I try to think in I like it, man. I try to think in ways of I don't know what's going to happen next, right? I don't have really any real degree of predictive power. I can really only wait for things on the chart that allow me a pretty solid way to structure risk and say, if I'm wrong, I'm dead wrong. So I'm looking for this to hold. We traded into it. We traded right back into it here now multiple times. We've held. Came in on 10 a.m., popped to the downside a little bit more. I think we either hold here or I'm dead wrong. We run through. Again, maybe the 440s, 430s. I would look for this to hold, which is why I'm going to run a pretty decent stop outside of that. If I'm wrong on this thesis is cooked. We're going to trade, over 200 points below VWAP, back down maybe to lows of session, really start to flip this thing. So I'm going to run this one long. Let's be my trade. I'd love to get a stop like way outside of here because I would like to hold on to this. Like if we run all the way back up here, I think this could be something that really turns into a solid one. But that's going to be my trade. Long from 49, 499, stop at 49, 305. Somewhat aggressive, not waiting for a ton of confirmation, like coming out of this zone, buying on the way back up here. But that's typically my style. I look at this as bullish overall, right? Really aggressively bullish market from yesterday, bullish higher time frame from overnight session, zoomed out on the 15-minute, opening up to the upside, pulling back to retest VWAP, continuation trade, back up to push through and fill out this candle nice and bullish. Do we do that today? I don't know. We're fixing to find out, as they say in the South. So yeah, I'll come back over. But yeah, I'm 49 499 and stop at 49 305. So I'll call out any management on this one. But I've been enjoying getting the analysis across markets, man. It's cool to see. I got your chart back up here. Really cool to see. So we're looking maybe at Russell or Dow now that ES had traded below that 33s by a bit.
Yeah, so right now the only market that hasn't broken a low yet is the Russell. So, and we're sitting right at opening print, which is 3130s here. So I'm kind of letting this figure itself out for a minute, and I'm interested back up over at the moment 3320s for the Russell. And I would love that if that happens, the S&Ps get back up over like 37, 38s, and we can start kind of working back up. You know, that high ended up being that pop we got was 69.44s. So I said like, 40, 42, somewhere up in there we can kind of pop to and then come back down, which we've essentially done that, right? We've hit kind of all of the things in which I wanted to see there. The only thing we did was the S&Ps came back down and made the new lows here, which you can make an argument would be a little bit better had we not done that. So that's why I'm looking at the Russell right now, because it didn't make those new lows. And obviously it's the Russell, which has been stronger overall over the past. I mean, it's green on the week at this point, and nice push up through those highs yesterday and things like that. So it is one of the stronger markets. And if we can do that, then I'll be in here up over 3320s. Stops on this would be about 4 or 5 points for the Russell. Risk reward is about 2 to 1 up to highs, but assuming that we get this trend, then we have essentially not unlimited room to the upside, but I don't have anything above. We're at all-time highs in there. So we'll just let it work and see where it wants to go if we can get a trigger.
Okay, nice, dude. So for position management, for trade management, are you pretty much full in, full out? Do you scale in, scale out of anything? What's your play on that realm?
Yeah, so we'll have first targets there up at 4270s, which will be those, or somewhere right up in that area. I'm not going to be a dick for a tick, but somewhere right up in that area. And then from there, we'll look to trail the rest of the position and see how far we can let it go. So we will take trims for sure. Sorry, I'm thinking.
No. Go ahead, man. No, nice. No, that's the answer right there. So jumping in once you get your entry, once you get your setup there, and then first target area, key spot on the chart, taking some partials, starting to close out, starting to scale out, and then letting that trade run. Will you? I don't mean to quiz you here, but all the hot questions that I know everybody loves to ask. Will you go stop loss to break even at a certain point before you go partial scale out? After you go partial scale out, what do you do with that stop loss on the trades that are working in your favor?
Yeah, so if we can get a trim, then sure we can bring the trail up a bit. But it really just depends on if the chart permits it more so than anything. Like if we are only up like 1R, for example, then I'm not like super interested in bringing that trail up because I just don't want to get taken out. I don't want to get shaken out of it and then it end up working, right?
Yep.
So like for me, I'd rather leave it there where it should be, quote unquote, and just kind of let it do its thing and then work on bringing that up as the chart says so. So if it permits it, then sure. But otherwise, I'm not necessarily too concerned by it. I'm not a huge fan of like letting something go up like 3Rs and then coming back and, going out for a loss at that point. But at that point, the chart should permit some type of reduced stop, ideally.
Nice. Yeah, nice, man. I love the analysis. Yeah, I'm also not a big fan of just completely risk off like at a certain arbitrary point or some dollar amount where you just go stop to break even. I think trying to work off of market generated information, right? The price action that's in front of you definitely makes the most sense. If you're going to bring stops up, like maybe a nice new low forms and then in a little bit of drawdown, and then we start to get a lot of buying pressure. I know a lot of guys maybe will drag up where we say we got a new invalidation point, right? If we come back down through now and break this low after coming back into profit, I want to be out of this trade for this reason. But what you said on the front end there, which I do like that saying, being a dick for a tick. I was definitely a dick for a tick earlier this week. I had a trade run Not a big R multiple, again, because I just run much wider stops. I just find that running that more balanced R multiple and a much wider stop to allow the market to do a lot on the higher time frames, like just hang on to my trade, just tends to work for me. But I was a couple points away from a take profit. Didn't want to close it out, and then let the whole thing come back on me. There's data that I try to follow. I just made a video on this actually. So anybody from my community, we're gonna have another YouTube video coming out reviewing some of this stuff. But I try to rely on data a lot, like my own results, where I'm like, hey, if every one of your trades or 8 out of 10 trades continues to move in your favor after you close, you're closing out. You're closing out too quick. You're shaking yourself out of a good trade. If 8 out of 10 trades that you go stop loss to break even stop you out and then continue to move in the direction of your trade, you've got to accept the 2 that are going to come to stop you fully out in favor of the 8 that are going to move in your direction. So I started to lean on that a little bit too heavily this year. I took myself out of the equation a little bit more than I should have by way of discretion. And it's that balance. It's that constant balance that we face as traders of trying to adjust to changing market conditions while applying a lot of consistency, trying to review our trading and go, well, I could probably hold my trades a little bit longer. I could probably stop going to stop loss to break even so quickly, but at the same time, not go to the other extreme, which I found myself doing a little bit and taking some L's on. Never close the trade, never go stop loss to break even, that complete polar opposite. So it's that balancing act, man. It's tough, but I think the guys that I watch, right, some of the best traders, guys like yourself, a lot of others out there, they find a really good way of doing that, applying discretion and doing what makes sense while continuing to adjust to these damn changing markets that we face.
Yeah, and it's crazy too, because like you could have all the data in the world and the trade could be super close. Like you said, you were a couple points away and it's like all the data suggests that I should just like let this do its thing or whatever the case is. Mm-hmm. And then it still doesn't work.
Yep.
there's gonna be those trades that just unfortunately
sure.
It is what it is. They're just not gonna work in the way in which you either want them to or think that they will. And those are the ones that are like they leave you scratching your head like, what is there I could have done differently here? And a lot of the times the answer is nothing.
Yeah. No,
like,
the answer is just absolutely nothing, man. Again, one of the toughest, that's another realm, but one of the toughest things as well is just you could have even really high hit rate, really high risk to reward, beautiful stats across the board. There's still going to be L's in there, and a lot of those are going to come from you doing everything correct, waiting patiently, beautiful A+++ setup, and it's some unpredictable driver. Trump makes a comment, or not even. The market just wants to do something crazy. It could do whatever it wants, and it just rips right through your position. And again, it leaves you scratching your head. What could I have fixed here? But the reality is, we're going to have that. We don't know what's going to happen next. If we did, there'd be no reason for risk management. It would be remortgage the house and put it on the next trade. We don't. We're going to have a win rate that's not 100%. So yeah, man, accepting that piece is definitely difficult as well. Like I see so many traders post charts, or usually they're a little bit early on in their journeys, and it's what was wrong with this trade? Why didn't this work? And I'm like, I see those posts and I'm like, probably nothing. It looks great. Like the trade makes sense. I don't trade the way that you trade, but that to you, if it's following your system, looks great. Why it didn't work? Maybe it was yesterday and news comes out and we rip to the upside right into the afternoon as we sold off, and we get in Dow, what was this candle at 2:15 p.m.? We trade 550 points. We get the Trump rocket candle, right? Like, so,
nothing you can do about that.
No, nothing you could do about that. So that's it's a difficult part of operating in the markets. There's a lot of randomness on the short term, but consistency on the long term. So it's something really important to remember as well.
For sure. So I gave the idea out. I'm in a Russell position at the moment.
Nice.
And so I just want to touch on this for a quick second. You can see the S&Ps are holding under that 69.33s at the moment, but the Russell is actually holding the opening print here. So what I would like to see is, and there's a trade set up in the Dow here as well, but I would look for that to get back over the open, just to not be too aggressive here at the moment because S&Ps are under 69.33s. But there is a divergence in place there. if we can get S&Ps up through 69.33s, I think that Russell looks really good. And then from there, change trend on a smaller time frame. And then I think we have room for this to, like I said, turn into those lows of the day and kind of rally out from there. So
Beautiful, man. Beautiful. No, nice analysis. It's awesome to hear, man. Again, like I'm not somebody who's ever been able to make it work, but I'm always so interested. It's one of the reasons I like having so many other traders on my shows, get so much different juice, man, so much different perspective. It's really an interesting way that you string together all the markets, watching kind of all at the same time. Which one's the drunk friend at the bar? I love that analogy, dude. that the other one's gonna come and and pull to the right hand side. Not so much just as simple as like, well, I trade ES and NQ in correlation. I trade NQ in correlation, and I just wait to see what ES does, and then I do that on NQ because ES always leads, NQ. That I think is probably not enough. But yeah, watching key levels across all, how price is reacting at all of them, it's awesome. I watched Tanner, one of the guys that I trade with. I've had him on the show quite a few times. He does that with VWAP. He'll watch volume weighted average price because that's his his big MO. But he'll watch that across not only like ES, NQ, YM, Russell. He'll watch it across like SPX or SPY rather. QQQ, and he'll watch how price reacts across all of these at this key tool that he uses. And it's kind of something similar where he's like, well, we broke below a little bit on XYZ, but we held here really cleanly. Now we start to come back above on XYZ. I'm in long as we push off. So, it's cool to hear, man. Really cool to hear.
Yeah, I like it.
Probably works well, right? Works well enough for you to still be doing it here.
It does. So the divergence in and of itself was a strategy that I created back in like 2011, 2012. And then I actually had it coded into an indicator probably like 2013-ish timeframe. So like I have screenshots of legitimately the exact, so I'm dating myself a bit, but I have screenshots from all the way back there, like, 14, 15 years ago, in the same chart pattern, the same way in which that plays out. S&Ps come down, make new lows, NASDAQ doesn't, blah, blah, blah. Are the same. The only thing that's changed is the price on the chart, like the way in which the bars are formed. There might be a subtle like difference. This is a red bar, this is a green bar, whatever, over the course of a day or whatever. But for the vast majority of it, it's the same. Like,
yep,
it's the same exact thing I've done now for over a decade, which is kind of crazy when you think about it like that.
Man. That's epic, dude. It's awesome. It's awesome when you find something that really starts to work for you. And again, like I'm a big fan of simplicity, keeping things super simple. Looking at your chart here, and I love this for my community. Super simple, dude. Like I think some more complexity comes in because you are watching a lot of instruments. Like it's not just one chart that's open with a couple lines on it. But as far as the thought process, the reasoning behind the trade, the actual approach, it's super simple. It's not 47,000 different, complex ideas around it.
No. We try and keep it. We gotta try and keep it simple. Even the 5-minute charts that I'm watching, what I call my 4 grid over here, that has the indices, it's literally just a 5-minute chart. Like there's nothing else. There's no other indicators. There's nothing crazy on that either.
It's awesome, dude. It's absolutely awesome. So you've been in the markets for quite a while, man. Well over a decade here. Did you start in futures on the U.S. indices? Was the intro? Maybe you can give us the little the little intro story to the markets.
Yeah. So, I mean, it dates back even further. But like the main introduction I had to the markets was like we owned businesses growing up. So like we had gift shops and like if you remember Beanie Babies and like all of those types of knick-knack type things. We had some stores in the mall and in the outdoor malls and stuff. And so we would travel to like different trade shows, like Atlanta. And I think there was some in like Knoxville or something, maybe I remember. And every time we went, it was like yeah, there's a Walmart, yeah, there's a McDonald's, like everybody's driving, Ford, Toyotas, Chevys, whatever. And I'm like, all right, we own this one little store, but like we're driving, 10, 12, 14 hours away, and like everybody has the same shit. It's like, who owns Ford? Like who owns Chevy, right? So I don't know, probably 7, 8, 9 years old. I was actually in Atlanta the first time I got to sit in a Lamborghini too, which was cool because like in my little town, so I grew up in a literally there was one stop sign in the town that I grew up in. So like it was small town USA, just straight country vibes. Like the richest dude in town was the dude that you wouldn't expect it because he's in a beat up Chevy pickup truck or whatever with overalls on, but he owns like 3,000 acres of land, on the other side of town with a couple hundred head of cattle, et cetera, right?
Yep.
So like I didn't see those types of things until we went to the city and stuff, and then I started seeing like I said, all the other normal stuff. So like that's what got me interested in the markets. Is like it's like you're telling me I can buy a piece of like I can own Exxon, like I can own a piece of this massive company that's supplying oil everywhere, and some people probably don't like Exxon, whatever. But the idea was, okay, I can do something with this, right? And then from there, it kind of progressed into. So one of the things we did was we built a house, and I was 14 at the time, and I ran the backhoe. My dad played GC, so in reality, like I played GC, right?
Mm-hmm.
You know, again, small town. I could take the truck and throw a farm use tag on the trailer and run down the road and go get what we needed or do whatever. So like I just got exposed to doing, blue collar work, construction work, etc. And I was finally like, all right, I'm doing this work. Like you're paying these dudes, but you're not paying me. So I was like, hey, we got to talk about this. And so my dad was able, we ended up selling the house like 18 months later, which was super unfortunate. It was a whole different story. And when we sold the house, he gave me $2,000. And like, that's the money in which I put, at the time I was 15, that's the money I put in my first trading account, which was technically in his name, obviously, because I'm only 15. And that was with TD Ameritrade back in the day. And
Wow,
I
dude.
was so, you say what?
I said, "Wow, dude, that's definitely some time in the markets."
Yeah. So, and what's crazy is that, and this is like some people listening probably don't even know this. I was so green and so new that when I put my first trade on, which oddly enough happened to be in Exxon, I still have my journal from when I was writing my notes and doing all the things, right? My account went down like $10. And I'm like I see the price here. It's like $85. I'm buying it. It hasn't moved. Like, what happened? I didn't know you had to pay $9.99 per trade in commissions. So like I bought a handful of shares,
Yep.
which again, I only had $2,000. So it's not like I could go crazy. And I'm instantly down like $10 on my account. I'm like, this makes no sense. And I somehow just overlooked the $9.99 per trade commission. So yeah,
That was the intro, man. That was the intro.
that was the start.
Yeah, that's epic, dude. That's absolutely epic. So started in stocks, man, way back, and I love the kind of the origin story, right? The idea of where it came to be, the interest in the markets from so far back. That's awesome to hear. How did you find your way over to futures? How did you eventually find your way over to trading futures?
So I ended up kind of scaling my way up, and I was trading options, and it obviously allowed for an insane amount of leverage. So I went full time in July of 2011. I was an electrician. Oddly enough, I did end up going into the blue collar trade. I was the youngest journeyman electrician in the state of Virginia. You can beat me by I think 3 weeks or something crazy. So I was 17 at the time when I got that, and the or when I started working, I was 17 at the time when I started working. And then from there, it was like, all right, I like this leverage piece because I can go take like $2,000 and this thing could potentially run, like 4, 5, 600%, right? And it's like I can use a lot less capital. And then from there, that just kind of like led me to the introduction of the leverage that you can get with futures, because at the time you had to use a different, prop firms weren't really a thing yet. I don't think Top Step came around until like 2012, 2013, something like that.
I was gonna
Maybe.
say you're even predating prop firms in general as a whole back then. No such thing as the retail prop firm model that we had.
Yeah. So
Yeah.
it's crazy. You actually used to have, and I found it in my notes the other day. You used to have to get a Series 56 if you wanted to trade prop, and you traded with like an actual firm. Like it was a firm capital type situation. You had to get licensed, and you would trade strictly just equities. So, and we're getting a little bit of movement here.
Yep. I'm watching this as well.
Real quick. We got super
know.
close to that new high there, and I didn't take anything off. A little bit of a dick for a tick on that, but little shimmy shake on that pullback there. I think it'll be fine. So yeah, I got introduced to futures somehow. I don't exactly even know who the first introduction was. And then from there, it was just like, okay, so I can control the notional value, right? Like let's say at the time was, I think when I first started trading S&P futures, they were at like 1,500. So you can look, there was a big crash, I say crash, in like August of, here, actually what I'll do, I'll pull this up. This would be kind of cool to show.
Yeah, man. Leverage gotcha over.
Leverage, yeah, it's always leverage, bro.
Yep.
It's always the I want more type of thing.
Well, especially like you said, starting where no prop firms prop firms weren't an option, right? And you're trading actual live capital. It takes money to make money, and if you're able to get a hold of controlling a lot of notional value, which is really what we're doing in live futures accounts on a lot of leverage, you can turn that little amount of money either into nothing or a lot of money.
For sure.
But yeah.
Well, and the other piece too was, which this didn't necessarily apply to me because I was already above the PDT rule for trading options and stuff. But that was one of the things that interested me about futures was like,
no,
I don't have to go put another $25,000 in an account.
Yep.
Right. Because in order to get the day trade margins back in the day, you had to trade with a specific day trading futures firm that would offer those margins. Because like TD Ameritrade would give you whatever maintenance margin is, and then they had what they called like a day trade margin, but it was still rather expensive. So you used to be able to control an S&P contract, NASDAQ contract for $500, and you had to go to a specific firm for that. So this was literally this move right here, which again, the S&Ps were at 1,300, right? This was my first full week. I quit my job the week prior. And this was my first full week into the markets, was this entire section right through here. And if we take a look at a daily, it doesn't seem like a ton, obviously now compared to what we see in terms of ranges. Hello? Can this hear yourself out?
No, still, you still hear me?
Yeah, no, my chart was.
Oh, gotcha.
I was waiting on that.
Yeah. No, so you quit the job, came right into the markets and caught a gnarly dip.
The markets just took a dump. And I'll show you, like, this was part of the piece that kind of led into the divergence in and of itself right through here. So like this was that week for me. This is July, end of July of 2011, right? We had a massive move to the downside, and again, the pricing will change a little bit from the weekly chart to the daily chart. It's just the way in which the futures roll happens. But we're still looking at the exact same time frame. Is we came down here in August and we bottomed out, and then we did this same thing, right, where we chopped around for a bit, and then on 10/4, so October 4th, we ended up coming down and we popped this low by just a little bit. And like if you go back and you look at this day, the price action and the way in which we traded that day resembles the bigger picture price that this looks like, right? Like the 5-minute chart looked something like this. And we did kind of the same type of thing. That's gold actually breaking up through highs there. We did something very similar in price on the intraday. And like that was one of the first things that I noticed. And like that's where the divergence actually started to come from for me, was like, hey, this chart. And again, mind you, like I couldn't see, like at the time, I didn't see any of this other data on the right. Like I didn't know where we were going from here or whatever. But like on the intraday basis, I saw this day that we absolutely just ripsticked back to the upside off of the same type of looking pattern that we had on the daily, just on a 5-minute. So yeah, we kind of went off on a little bit of a tangent on that one, but
this is solid, dude. This is super solid.
Yeah, so like that's what started the divergence.
Nice, dude. Awesome. You just got to watch it from a higher time frame to a lower time frame. You went, I bet there's something to this, man. There might be something more to this. Well, dude, what an insane story. That is quite the backstory, the intro to the markets. I love it, man. I love to hear it. Really, really cool. And to hear you found something, way back then and have stuck with it so long, like you said, through different market conditions, but and small adjustments, but pretty much the same dang thing is awesome, dude. Super, super awesome.
Yeah, it's been fun. Like I said, I wouldn't know what to do. Like if you took levels away and you took divergence away, like I don't have anything else to do anymore. Like I'll just sit here and twiddle thumbs, I guess.
It's also impressive, man, that you haven't tried to add anything crazy in there, man. I'm guessing like you didn't go on a journey to find order flow or some kind of volume tool. You just stuck with what you had that started to work from back then, and maybe small adjustments.
Yeah, so I mean, we left out a pretty big window there from that time of opening that first account at 15 until the time when I actually quit my job. There was a lot of learning inside of that time frame, and I did experiment with. I had MACD at one point, RSI. I used a couple different moving averages for a bit. Which I still will use my daily chart that's on my main kind of like analysis window. Like I still have the 20 and the 200 daily, like on my daily, just because it's so widely watched. Like it almost doesn't make sense not to have that, because the daily 200 will react more specifically in individual equity names, more times than it doesn't. Like it's very tough for us to trade that and then not spend some time to either break through it or
nothing happens, right? Like at all. It's just like another price level. So I'm with you on that. Kind of similar to VWAP, not to take it, but kind of the same way I apply VWAP. Like I'm not a VWAP trader. I'm not the guy that's trading specifically off of that level. I don't really use it as support or resistance, but it's just one of those things where I'm like intraday on the thing that I'm trading. Something very interesting happens here far more often than not. Not always, but it's like I'd probably like to know about where that is. So I get that. It's not like you're using this as some specific tool. If we do this, we around the 200 moving average, I do something. But like I want to know where that is when we're trading into it, because probably going to be a little bit of a fight put up there. Probably going to be a little bit of volume traded.
Yeah, and you can backtest that. Like you can just pull up like a straight daily chart with a 200-day moving average on there, simple. Because you can use exponential, you can use simple. It's straight simple for me, and you can just scroll through. I mean, there's like 8,000 names you can punch in and like just see what happens. and see if there's any validity for keeping it on the chart. But speaking of that, we just made new highs in the Russell.
Yeah, man.
So if you have some Russell on, I would look to potentially take some trims here or put a tighter trail in and just see if it'll look to continue to run. I haven't actually touched it yet. I'm looking to see if we can't just continue this move here.
Yep, I'm in profit, sitting in profit, showing me about $500 on YM here. At an interesting point, I'll bring my chart up, but I see you got a couple people in the house saying MLT in the house. What's up? A couple guys hitting profit target on RTY. Nice. I'll pull my chart up quick here. I'm running in some profit here on YM. This is a little bit of the danger zone. I want to see us run. I'd love to see us come all the way back up to this 930 high. 930 15-minute candle here and start to push to the upside. I'm cautiously optimistic. This looks good. I'm happy at least where I got involved right in here after we were testing this zone quite a bit, that we put up a fight. We did pop to the upside. I like my entry. I like my trade for the day. Man, I want to watch this thing really continue to find strength here. If we come really aggressively back down on this, and we start to break through my entry, I really wouldn't be too super comfortable to say my thesis holds if we sell all the way back off, that we're going to come all the way back up. So I may look to cover with stop loss to break even, or maybe even just manage if we do start to turn this around. But so far this looks really good, man. Decent move back up to the upside. We're certainly going to try it. I think right here into the 49, 610, 620s, this is going to be the danger zone. Do we just pop like right back above into the middle ground of this kind of choppy back and forth range, this area of high volume, and turn back down to this area of high volume? Or are we going to break right through and come right back up here to go and challenge these 750s again? If we do pop to the upside, I think we could certainly just continue to run all-time highs. We'd be making the case for it if we made it all the way back up there, but I don't know that I'd need that. I think I would probably take this one off before we broke above high of the day, just in the case that we've already put a nice daily candle in here, or we've started to put a nice daily candle in here. I think we could push a little bit higher, kind of test this zone. Maybe today is not the day that we break and run. So I don't know that I'd need a huge break of the high or a continuation around these 49,900s, which would be the current all-time high in this YM contract. I'd probably be looking right into the 730, 740s. I'd snag a little W on this one. I'm running one mini, no scale outs or trims or anything like that for me. But yeah, that's what I'm looking at to the upside. Again, if we come aggressively back down on this, I'm not going to feel too great. I really don't want to go stop loss to break even though it would have helped me earlier this week, because this is just a key level. This is VWAP right here. This is our prior day high. This is our high from some consolidation from Asia, London, not our pre-market high, but I think we could retest this again, and this really isn't a great invalidation point where I say I think that's completely unreasonable. It'd probably be down here outside of this zone, all the way down into this area. So for now, I'm going to leave this one on, leave it as is. That's my play for YM for right now.
Nice.
Yeah,
I like it. I just took a little trim on the Russell right around 2745s on the trade we took earlier down there around 33s. And then I dropped you a screenshot on Discord. I don't know if it'd be easier I think it's probably easier if you can pull it up, maybe.
Sure. Yep.
And I can walk through a little bit more on what I was thinking there, and I'll.
Sure. Hang on 1 second. I'll be able to throw this one on here. Awesome, dude. Great setup, great explanation, great trade. Love to see it. It doesn't always go that way, as we know. Can't pick the day that you hop on a live stream and get a winner. Like I'd love it to be that way. It's just not the case. But it's nice when it works out. You get a good example.
Yeah, for sure.
Let me share this tab.
Yeah, I went on live with Tanner, and it was almost a similar setup. And it's funny because like you'll see this relationship here is he chose the Russell, and I chose the Dow, and the Russell worked really, really well, and the Dow didn't. It was just like one of those. It's like it's the same exact setup. There's just nothing. There's nothing else I can do about this.
No, dude, I used to get the Power Hour segment on Top Step TV. I was trading with them for quite a while, and sometimes I'd get like a Thursday like after news or even into like an NFP Friday, and I'm like, I'd love to hop on here and take a win every day, guys, or at least demonstrate my trade idea, but like it's just not it for me today. So that's part of it, man. Can't control what's going to happen either, right? Where you had something work out really clean, and he took the Dow and just didn't play nice with him.
Bro, I wish.
Right? I wish it was that easy.
But yeah, so we got a nice move going, dude. It's a nice move.
Yeah, I got your chart up on the screen, the screenshot that you sent me, the 4-pack here.
Can you zoom in on that a bit or no?
Yeah, let me see. Hang on one second. Let me come back over to my trade that's running in some profit while I mess with this. Yeah, man, let's see what we could do here. Let's see. It's going to get a little bit distorted, but yeah, I can blow this up a little bit. How's that?
Oh, that's perfect.
Looking a little bit cleaner?
Yeah, we can work with that. So, all right. So the trade in which we took in here, I'll give you the reason. I'm going to go back to the original entry and kind of the thought process, right? And then I'll take it into why I just decided to take some trims here and then what I think can happen from now. So again, we got the 4 main indices here. This is like when you see me looking over here to the left. So I've got 2 main monitors, the one right in front of me and then this one to the left. This is the piece that stays. This chart is exactly right here where I'm looking now. I just overlapped it on top of the one that I have. So we'll see when we come down, those red and green arrows that are on the chart, those are that's the divergence indicator that I had coded up that I talked about earlier. So in the S&Ps, we wanted that pullback to 69.33s. We wanted some type of divergence there in order to look to get longs, right? And you'll notice that when we come down that next time, right around 10:05, you can see that at that moment in time, the NASDAQ and the Dow, that's that the green arrow at the bottom for those 2 charts, right? And if you go back and remember, I was like, hey, there's another potential entry here in the Dow for longs. That was that green arrow right down there at, I think the highs on that bar were 49,491s. That's a lot of 4s and 9s in that. So like basically call it 49,500s, give or take, right? Mm-hmm. That was the time in which we took the Russell entry right around 27.33s. So we had the combination of a couple different things in our favor. One, we had the S&Ps in the 69.33s. Now, were we technically a little bit beneath that level? Yes, but we're also right there at it. We're holding the divergence from the Russell not making the new lows and the NASDAQ and the Dow making those new lows. So all I'm following in that moment in time is just those green arrows that say, hey, this is a good moment in time where price can hold. That drunk dude that went over there to try and pick the fight, in this case, it was 2 of them. It was the NASDAQ and the Dow, and the Russell and the S&Ps were like, no, like let's get out of here, right? And at the same time, the S&Ps was grounded on that 69.33. So we had a level to work with, right? And you can kind of see the same thing happened at the top on the Dow there up at 752s, right? Is 15 minutes into the day, 3 bars into the day, everything was making new highs but the NASDAQ, right? So that 3rd bar on the day in the NASDAQ was lower than the open, obviously lower than the high of the day. So we already had a divergence that said, hey, wait, don't take this breakout over 752s, and let's see if we can pull back and establish that divergence, right? So we waited for all those things to come together. We picked up that entry. And then now the reason in which I'm taking some profits up here is because, like at the moment of this screenshot, the Russell is the only market that's making new highs for the day, right? When I say making new highs, I'm just talking intraday basis only, not overnight sessions or any of those things, right? Just purely from 9:30 to 4 o'clock, which in this case would be 9:30 to, whatever, 10:30, right? The first hour of the day. We don't have new highs yet. So for me, we're at a spot where the Russell's making those new highs, nothing else is. So if the same is going to hold true that it did at the lows of the day, where we have that divergence, now we're at a point where this could potentially turn into a pullback, which is kind of funny. You were mentioning this with the Dow. Now I'm thinking, hey, the Dow can probably pull back to the open, give or take here. The S&P's, NASDAQ, they still got a ton of room to go, but we could start to pull back from here. And if that happens, then I don't want to give back, these 10, 12, 13 points in the Russell. Like it's now time. I have a reason from the chart you can start to see there's a little red arrow on the Russell at the time of that screenshot. It's kind of hidden underneath that little high marker there, but you can still kind of see that there is one there. So that's telling me like, hey, this is now time for you to potentially look to start taking some. Could it turn into the highs? Sure. Am I interested in shorting this with the strength in the markets? No. Right? And we can still continue to rally from here, but that's the first early warning sign for me that, hey, this is potentially, quote unquote, the top. I don't think it's necessarily the top because of the overall bigger picture trend, but at least intraday inside of this 5-minute move, that's probably a good area for a top to occur. If that makes sense.
Yeah, dude. Awesome explanation. Awesome breakdown from really from start to finish, man. It's cool to watch it all come together. I think this kind of 4x4 chart that you have set is really interesting to see. It's awesome, dude. We had someone from the chat asking a detailed question. Eric, for the RTY divergence at 950, would you want to go in at the 950 trigger or the 955 trigger?
So in that case, I waited for the pullback to open. The technical trigger would have been on 950, even though that did make the new low. It got the new low and triggered at the same bar, which is
nice,
fairly common. You can see like the Dow kind of does the same. Thing initially. We just couldn't quite get back up through that prior high. But yeah, for the most part, that trigger bar can have the new low at the same time. We broke the lows by like 3 ticks is essentially what happened there. 2740s and 2710s is that new low.
Nice. Very nice. Awesome, dude. Now, the indicators that you have coded up, are you really reliant on those these days? Are you pretty much like, your levels that are going to mark up, you understand, what you're waiting for divergence across all of them, and you're essentially just discretionary with the entry, although it's really like, if you see something like that set up often, that's pretty systematic. But you're really not waiting for a trigger so much anymore, or something super duper specific, or...
No, so I'll take them early, but the technical trigger would be the bar break. Like we mentioned for me, that's how I get tighter entries. So for the Russell, for example, like that trade would have been about a 60, 70 point stop. So that third green arrow on the Dow, we would be long over the high of that bar, that 49, 491. So like 492s, 493s, somewhere around there, like we'll look to get long, which was the same reason in which I said the 3320s at the time, because the 2 minute at the time that I said that was the high, right? And it ended up turning into 3430s by the time the 5 minute had actually finished forming. So we were like a little bit early on the technical trigger there. But we had, the S&Ps into the level. We had all the other things that we needed. So being a touch early on that wasn't necessarily a big deal. But in terms of like relying on them, they're just as simple and stupid of a visual as you can get. It's just a green
Yeah.
arrow.
Yep.
It's like, okay, that
Points it
probably
right
that
out
probably
for
means I
you.
should long here.
Yep. Yep. Makes it really clear. Maybe gives you the final like, hey, if I'm stepping outside of having this also, right, I probably am doing something outside of my approach. If there's no arrows at all in the chart and I'm longing, probably not within what I would consider the right trigger for it. So, but no, cool, man. Awesome. I think it's a really interesting trade, man. Simple, makes sense to me. Do you find like here's where my head always goes with it. Do you find that you do take a lot of small stops on the way to some of these larger profits because it's fairly tight in it's not so much so that you're like taking it on the way down or really aggressively counter, but it's fairly tight by way of stops go. Like, do you find yourself taking a lot of stops on the way to these larger risk to reward trades? Will you take the same trade more than once? Like Tanner, for example, he'll take the same setup like 2-3 times and then he'll capture like a 5-1. So he'll take these small paper cuts on the way. How do you find that with this style?
Yeah, so I'm typically uh, let me say this first, and then I'll go back to that. Is
Sure.
I give myself a max of 3 on the day,
Okay.
right? And I want these in the direction of the larger trend, like I mentioned, where I'm not interested in like that short off 752s today, because that's going against the weekly, daily time frames. Like, and we don't have a real reason for this to be a quote unquote top yet. There's no smaller time frame flip, because the hourly kind of turned back into an uptrend yesterday, right? So if I'm wrong 3 times on a day, then that's potentially where that market is now flipping that trend on, say, an hourly, for example. Like if it's going to fail 3 times on the day, we're just going to pop lows, rally a bit, pop lows, rally a bit, and then pop lows again, then like that chart is inherently weaker than I wanted it to be, right? Because we shouldn't necessarily do that. We should make that low 1, maybe 2 times, and then from there do kind of like what we did today, right? That would be the picture perfect scenario. So if it doesn't work on the 3rd time, then it's like, okay, something's wrong, and we're just going to take a step back, right?
Nice.
But to the answer of do I find do I take a lot of smaller stops? I will if I'm trying to be cute, like the trade from yesterday in the NASDAQ, which had the opportunity for us to, roll over from that 493 level. It presented a move for 500 points. Like I'm gonna take that trade. Like it's a 20 to 1 risk reward ratio. Like I'm taking that trade, and I'm not gonna mess around with it and take it multiple times on a day, just because it in some way was fighting that trend. That's gold popping up through 69.60s there. But for the most part, like I'm patient enough, and I can start to, like when you watch a movie and it's like you see, like we've watched the same movie 100 times. It's just different characters, and like the plot is slightly different, but it's in the end, it's like, the dude fights the bad guy, almost loses. He's got his knife to it, like the knife's on his throat, and then like the damsel in distress comes in and she knocks him in the head with a piece of wood, and then he gets back and he kills the bad guy and gets the girl and runs away happy ever after, right? It's the same plot line, like literally every time.
Yep.
It doesn't matter whether it's freaking Spider-Man or The Notebook. It's the same storyline, like across the board, right? So I'm really good at being able to read the storyline and read what's happening to be like, okay, we probably should wait for like an extra little shimmy here or something, right? Like we came down, we got that, we tested 69.33s on the S&Ps like to the tick, for example, right? And it was like, okay, now we want to see a little bit something extra. And then that little something extra turned into the Russell being able to put in, that nice rally off of that low and then pulling back and holding the open. So like seeing those types of things. Now, am I right all of the time? Of course not, right? But I'm good enough at seeing how this movie's playing out to be like, okay, yeah, I want to wait for the Dow, to go back to the bar analogy, to like go ahead and take its swing first. Like let it go ahead and make that extra new low, because it didn't quite get the reaction that everything else did. Right. So when you look at like just that specific, and this is very minute details, right? But that 950 bar in the Russell, that's the only bar that was able to break the prior bar's high, right? So in the S&Ps, yeah, we bounced up, what was it, 12 points? I think we traded, 44 quarters. So 11 points off of 33s. But we still didn't break that prior bar's high. So it's like, okay, the Russell's telling us something there, that it has some strength, it's doing the thing. But the other markets weren't quite really able to do that. So it's like, okay, let's let them finish out, their part of the scene, if you will, right?
Yep.
And so I'm good at recognizing those things and being, most of the time, a little extra patient, to allow for like the type of entry we saw on the Russell today, where it's like, okay, we just take one and now we're good to go, right?
For sure. Nice. Yeah, that added piece of discretion, right? For staring at the charts for so dang long, you start to get that feel. You start to get that, let me wait for that little bit of extra pop here. I'm applying some of my discretion to this Dow trade at the moment. I'm cautious that I don't know that we're gonna run this high without a pullback here. Let me pull back over to my chart. I use a little bit of order flow as well in my trading. This was an awesome explanation, Eric, man. Thanks for taking us through all of it. I don't mean to come right back over to my stuff, only because I'm getting ready to manage this. I just don't know if I want to allow this thing to turn completely into a break even in the pursuit of this next pop to the upside. If I'm only going to hold here to begin with, I'm watching cumulative volume delta, which I watch on Bookmap for YM as well as ES, start to drop off a bit. I think it could be a really, really clean pop to the upside if we get it. I just don't know that I want to allow this thing to come all the way back down on me. It's shown me 150 or so points, and we're continuing to stall up here now. So I'm debating just the management. Other part of this is eating into me is I've taken some L's coming into the beginning part of this year, holding my trades for these larger extensions. I'd like to start to dig myself out a little bit in this Top One Futures pre-live account that I've been hanging on to. So I think I'm going to take this one, guys. I think I'm going to take my my $650 here. Call it a session. Could easily pop here, but I really don't want to allow this thing to come all the way back down on order flow. Let's see if I could share this real quick. Hang on real quick. I think I've got to remove and then stop my share and then add. Boom. So we'll see how my read of Bookmap. I figured out how to share this on StreamYard, but I'll see how this is working out for me today. So something I watch on this, and my community knows a little bit about it, is CVD, cumulative volume delta, which is really not so much order flow as much as it is just delta. On a move where YM is continuing to push to the upside, and we really had a nice CVD coming right into the open, but we are just failing to get buy volume around this move, and we don't have too much more by way of liquidity that I'm looking at us going up to target. I start to get extra cautious, especially coming outside of that next like high volume area, little level on my chart. So especially on ES as well. I've watched ES a whole lot longer. I find it to be a lot cleaner on stuff like cumulative volume delta and levels up and above. We came into this, we came into it a bit, pushed. We've really been climbing on cumulative volume delta like since the open really aggressively. Now starting to die out. Certainly doesn't mean we're going to turn to the downside. Certainly doesn't mean that, we're going to reverse. We're going to come all the way back in. We can't just blast through on a declining cumulative volume delta. Market can do whatever it wants to do. But one of the ways that I start to read this for holding a trade to the next level all the way to a take profit is if CVD, if cumulative volume delta, is starting to drop off. I'm not really seeing the volume behind the move that I want to see, especially on YM itself. I start to get more cautious, start to get a little bit more cautious. So for those two reasons, I'm taking my trade off. We'll see. I'm sure this will get filed under the hold the trade to the moon because we go and run all-time highs today. And I'm caught with, hindsight bias, taking my profit early, but I'm going to snag that one. So what do we got? 652 on the top one live account.
So what, when you pulled that up, I just said like, whoa. What is any of? I don't mean this in a bad way. What does any of that mean? Like, what does that actually tell you?
Let's run it, man. Let's run it. I use Bookmap, which is this software, in a really stupidly simple way. So I'm definitely not the order flow expert, but essentially what we're looking at here, this is like ES's Bookmap. Oh, excuse me. This will be ES's Bookmap. A little bit easier to kind of explain on this one. All this is are price levels and then live liquidity by way of quantity at those price levels. So it's essentially a DOM. It's a depth of market, and they just break it out into a crazy looking heat map. So everything to the right of this little line right here, and I can widen it out, this is essentially just a traditional depth of market chart where we've got a quantity of orders changing in real time above and below current price that we're trading, 69.45, 69.46. And that's showing us what orders are resting sell side or buy side on the book right now, right? You can use that to your advantage if you want. You can try to use that in so many different ways. What I really look for on Bookmap is this, where we have a stack of orders resting at a specific price level. I kind of want to be aware of it, like that 200 moving average, like the VWAP. I don't use it to say, I'm going to target 69, 63 because I think we're going to come up and fill these orders and then reverse. I think in terms of what's on my candlestick chart, do I have a level like for YM, for example, we had quite a bit of orders down below where my stop was at 49,300. Am I aware of this level? Am I paying attention to where a big stack of orders might be? What I tend to find, just pattern recognition, price seems to want to go to these orders, kind of fill them, go and grab liquidity. If we get to a stack of orders, a really big stack, maybe like up into these 60s, 65s, it could be interesting to watch. Are these going to stay on the book first off? Because it could be manipulation. Anybody can place orders, even though there's some legal ramifications around like intentionally spoofing, but a lot of it is manipulation. If they stay on the book, what happens when we get there? Do those sell orders fill? Does price rocket through? Buyers step in and say, we're not only taking all of these, we're going to explore higher. Do we start to hammer into it, get some resistance, buyers can't lift it, maybe it fills and then we drop right off the bat? But more so just another area of interest, like key level on my chart that I might want to pay attention to. And then along with that, down on the bottom, cumulative volume delta, not really order flow, just volume analysis kind of adds into my excitement coming over to the futures market, like we were talking about before hopping on the session, where I got volume profiles and just traditional volume. Cumulative volume delta is essentially just what it sounds like. It's the difference between buy and sell volume anchored to a specific point in time. So what I'd like to see from cumulative volume delta, along with just maybe traditional volume increasing on a move to the upside as price is moving higher, what I'll often find, and again, just the dumb guy narrative, pattern recognition, like forget the actual narrative behind it. Oftentimes, if price is going to continue to run, it's going to be a really big continuation day. We'll see cumulative volume delta increase. Buyers are outweighing sellers by way of volume, and price is going to continue to push to the upside. oftentimes, if you start to see price stall out, cumulative volume delta starts to drop off. You see volume maybe dying out as well. It's giving you maybe a little bit of indication that sellers are stepping in there. Obviously, you could see it in price as well. So kind of back to that original, like you see this stuff in price action as well, but maybe a little bit more indication that, we're going to struggle to move to the upside. So I look at it again, kind of just like a pattern recognition way. I think it helps read the DOM if you want to try to use order flow a little bit better. You can go back and watch day over day. This is all historical, right? Kind of like a candlestick chart. What happened as we came into this level here? Well, we had, I can't scroll all the way back, but we had, maybe I can scroll out, 250 on the book sitting up here, from pre-market into the open. We popped right to that level, grabbed that, maybe found a little bit of selling pressure, after that. Now, you could always make the case, well, that's overnight high or prior day high or another key level on the chart, and that's why we did that. But I kind of find it interesting to watch, especially for ES, trying to get a little bit better at YM. I find it really interesting to watch where these key levels are, where this liquidity is throughout the trading session, what's happening as we're getting there, and then where is CVD sitting throughout the trading session, and then what continues to happen, as the market pushes on. But again, secondary to what I do for just simple price action, market structure, and volume. But, in a situation like that, maybe I start to take it into consideration a little bit. Do I want to hold this trade, as we're pushed to the upside? It's definitely helped me more than it's hurt me, but I will say it's like anything else, right? It can be too much information. It can kind of be conflicting information. I'll come back over to your screen while I set mine back up. But for me, from a stupidly simple perspective, if I had to distill it down, if there's big stacks of orders on the book that have been there for a long period of time, I want to know about it. I think they are going to act probably like a key area of interest if we get to that level. And then for cumulative volume delta, if we have a really extreme thing happening where positive 20,000, we got a ton of volume, it's just continuing to be buyers, I probably want to know about that. Maybe we're stalling, maybe we're selling off, because watching it for months and months and months, often what you see is some similar pattern repeat itself. So that's my deal on Bookmap. Again, so much more of a complex and an actual way to go into what we're seeing there, the real narrative behind market auction theory. I try to keep my trading, even though that does look complex, I try to keep my trading really simple by the way of like pattern recognition. I watch a chart all day, every day, and like a puzzle piece, what happens when we get to this area, right? What's happening when I see this on the chart, kind of like that movie playing out. And I try to build some discretion around that. I have the framework for, what I'm looking for level to level, right? Creating a bias based on overall trend, how we're opening up relative to yesterday's candle, and then using all of these tools in conjunction in my discretion, how can I make the best trading decision for that day specifically? So if I had to distill it down, super simple, discretionary, price action, market structure, volume, a little bit of order flow on the back end.
Okay. And out of curiosity, what are the different sizes of the balls that were on the chart? Like, what is that?
So yeah, I'll pull back. So in the middle, I kind of skipped through. I'll give the whole run through. In the middle, it's this is a price line right here for the middle ground. It's displayed as best bid. Whoa, best bid and best ask. In the middle, it's just volume bubbles, so kind of just an overlay. Here, maybe it'll display it if I throw best bid and best ask. But it's just volume bubbles displaying kind of like a traditional volume overlapping that price action. And it can be a little bit helpful. Again, same thing that you'll see down on the bottom for traditional volume. It's just kind of putting it on the chart as we get to a key level. And this will adjust as you zoom in and out for time and price. What happens as we get there, right? Do we have, volume traded out? Is there quite a bit of volume being traded, for this specific area? So you get a little bit of like traditional volume overlaid on the chart as well. I don't know that I use that as much as I do really just to say, hey, I can get this from a DOM, but I'm an idiot and I don't like to stare at a DOM all day. Is there, a stack of orders that have stayed on the book for quite a while that I want to pay attention to, around my key levels on YM? There's not too much on YM. YM's much thinner in general, but, is there 100 lot on the book, at an area where I'm looking to take profit 20 points above that. Maybe I want to be cautious. Maybe I want to like front run that liquidity a little bit.
Interesting.
Yeah,
So,
yeah, but
the
go ahead.
reason I asked that is, I knew a guy back in the day, and like the CVD you're talking about. Um, this was, I would assume, pre Bookmap and all that,
Yeah,
but it was essentially just, it was called a delta divergence. So it was,
yep,
I would assume, something to do with the volume of the cumulative volume, CVD,
yep.
um, which is also hard to say. Um, Basically, where like price would be moving. So I didn't know if the reason I asked was, I don't know if the bubbles or the balls, whatever we want to call them, would represent like, if you get like a big green bubble at the bottom, even though price is going lower. Um, so like he kind of had it the same way, where like the aggressive like buying pressure
Hmm.
would be more at that price. Like there's more buyers stepping in, even though price is coming down,
Yep,
from a delta standpoint, and that
yep,
would end up marking like a low, similar to
yep.
like a divergence, right? So I didn't know if you used it in that way, where like you get a big green ball and it's like, okay, now we're at lows or something.
Yeah, it's kind of what I'm looking at with that delta, that CVD, and that's what it is. It's the same thing. You can use just like different types of delta, volume deltas, but that's what I'm looking at, right? Like maybe we're coming down into a support zone, for example. We're making a low. We're getting a lot of volume traded, and that CVD is jumping, which might also display as a nice big green bubble and maybe a lot of volume down on the bottom. But you can tell that it's buy volume stepping in to outweigh sellers there, and maybe that gives you a little bit more indication that we're going to push to the upside off of that zone. One thing I will note is, just like everything else, just like every other tool that we use, because a lot of people look at this, and I'm partnered and affiliated with Bookmap. I just threw my link in the chat for those of you guys that are that are interested. It is just like anything else. Like, it's not magic. It doesn't give some leading indication of what's going to happen, and price will often, and volume, just disrespect what the pattern you should see on the chart. Just the same way that if you're using any other indicator, or even just watching price itself at key levels, really not putting up a fight or just doing whatever the hell it wants to do, you'll get that. But I think, just like price, time, volume, looking at order flow, looking at Bookmap, if you watch this stuff for long enough, you start to get a feel for it. You start to get a little bit of discretion. You start to say, hey, I've seen this before. Big stack of orders on the book. We go climb up to that. We fill. A lot of sell side volume comes in. Cumulative volume delta drops off. I'm creating the narrative of what we could see maybe up above price. And we start to turn to the downside. Price trades lower by a couple points. And that's a big turning point in the market. Does it always happen? No. I've had days where I've like shared it in my Discord, where like I've watched price just continue to sell off all day on a rising cumulative volume delta. There's narratives behind why that could happen, absorption, a whole bunch of different stuff. But again, like anything else, not even close to 100%, but something I think displays what can be difficult to read, like order flow in general, just on a depth of market. And maybe somebody says, no, that's way difficult to read. It's crazy predator heat map looking thing. But I think it displays it a little bit easier to read. And also, like, if you wanted to, you could record your screen. You can go back and not back test, but review, right? Review on the chart, like things that have happened throughout the trading session. Watch how price reacts around key levels, of liquidity, right? That Bookmap's marking out, and maybe try to use that to your advantage. But again, for me, I'd say Bookmap is secondary. Like, there's a lot of guys that are order flow first, they're order flow traders. Bookmap is very secondary to me. I also just haven't used it for long enough. I think I'm well over a year on it now, but that's not that much time relative to staring at a chart for years and years and years. So yeah,
Interesting.
that's kind of the overview on Bookmap. I'd say for anybody that's interested in order flow in general, I think it could be a pretty cool tool. For anybody that's struggling to read a depth of market, could be helpful. If you have something that's working really well, and I say this as a partner and affiliate for Bookmap, if you have something that's working really well, you have something that's, for those of you guys that are out there that are listening, something that's making sense to you, I don't know if adding a DOM or time and sales or Bookmap or any other like big tool in is really going to help you that much. I was so inclined with and enticed by volume when I came over from Forex and CFDs, where there's no volume. There's volume technically, but it's like, it's BS. It's not a centralized market, not a centralized
Yeah.
exchange. So, I was like, wow, I had a really raw chart when I came over, super raw. And you can even see it back in my videos, like it was completely naked, maybe a couple levels. And the only thing I have in my chart now outside of that is volume. And so we'll see. I'll probably, if I had to make a prediction for myself, I'll probably tone it back a little bit on order flow and volume in general, just because, again, it kind of gets to be redundant. It's like the same shit over and over and over again. But I've really been enticed, and order flow is another thing. Like, there is no order flow for, unregulated or just broker made prices with Forex, right? Even in, live Forex accounts. So it's cool. And I was like, wait a minute, you can see price, a quantity of orders at, limit orders above and below price. Like, that might be interesting. Let me check that out. So that's kind of bookmap on the back end. But again, other guys have been watching it for, half a decade or something. They have a really, really great explanation. I wouldn't consider myself the order flow expert for sure. I use it as a stupidly simple type of tool.
Interesting.
But
yeah,
I know there's a long rant on it.
no. I was curious because I've heard it mentioned, but I've never seen that chart in that way. So yeah, I just didn't know if there was something in when you brought up the CVD and stuff like that. It kind of made me think about Hubert from back in the day, who used to use it, which it wasn't Bookmap. It was he had it on TradeStation actually back then.
Yep.
So
Nice.
yeah, I mean, again, at the end of the day, like we talked about, it's the same information that the chart has. It's just displaying it in a different way, right?
Yep. I always come back to, like, market's going to go up or down and maybe sideways a little bit, right? our job, and we're really never going to be great at predicting exactly when that is. I think you can have some indication by watching some things play out over and over again, but like, my goal is to be a good risk manager, find spots on the chart that I feel present a really good risk structure, a good opportunity for being right or wrong, and attempt to not be wrong by way of my stop loss and entry being in a stupid spot. So I temper all of this stuff that I use, the extra stuff, because so many traders, and I was for so long, are searching for the answer, the holy grail, right? You see something like Bookmap and you're like, that's going to tell me every day where price is going. Perfect. It's just not the case. It's just like anything else. You could use it to your advantage within reason. But yeah, man, I really primarily, especially trading YM, like I said, I just haven't watched it for long enough. I primarily am marking out, key areas of interest on the chart, waiting for price to get to and from there. And directionally, I'm using some higher time frame trend, top-down analysis, right, from, the daily chart into where we're opening up relative to yesterday's candle, overnight session, to decide maybe which direction I want to trade if and when we get to one of those. And then at the area for my actual entry, similar to you, discretion, right? A little bit of that, like, subjective intuition where, you stare at the chart for years and, long enough, you start to get that feel for how candles are printing on, whatever platform you're trading on, and a little bit of that. But as far as like candlestick patterns or chart patterns, I really don't wait for engulfing candles or some specific doji or, falling wedge or anything like that. So that's my, like, grain of salt Bookmap, because it looks so crazy. And I think, like, I get comments after sharing it. I'm like, oh, here we go, another complex, this and that. I'm like, no, dude, I keep it stupidly simple. And even the way I approach this shit is very, very simple. So, grain of salt to that crazy looking predator heat map chart that's been called.
If you had to take, this is an interesting question.
Sure.
If you had to take one thing away, like if there was one thing you had to take away from your trading, what would it be?
Oh, it's a good
Like, you could
one,
never
man.
look at it again.
Yeah, I'd probably drop order flow first. This is a good question. I'll go in all the way back to, like, what I would need to keep. I drop order flow first, just because I think it's really helpful, but that is something that's additional. Then I'd probably drop traditional volume, like, volume down on the bottom, those volume bars that I run. Then, I would, yeah, VWAP and volume, but between those two. And then
Okay.
last, I would drop volume profile because I really do like volume profile for additional levels. And then I would be left with nothing but price, price and time.
Okay.
That's probably the importance of the tools that I use. Like volume profile, most important, and I have that displayed in two different ways, but it's the exact same thing. Traditional volume and VWAP, right? Volume weighted average price, because I can almost always tell you where VWAP is just by watching it for long enough. Then a little bit of order flow on the back end, but price, man, price and time, it's king. Price action and market structure is the way I refer to it. That's always going to be king.
Okay. I
Yeah.
like that.
How about you, man? If you had to go back, and I know you don't have much to drop here.
Yeah, I mean that's kind of like what sparked the question is I don't know what I would get rid of, to be honest. I mean, could I get rid of the divergence indicator and like not have the red or green arrows on my chart? Sure, because I can still look for price to make those new lows or highs and not have the indicator tell me, which is what I used to do before that was even built. But yeah, I mean, I guess like at the end of the day, like I only really have those basically two things, like levels, divergence, and basically just price. So though the one thing, it's interesting because like I don't have volume at the bottom of my charts, like at all. Like what I sent you and what you see here, like obviously there's no volume anywhere. The only time I care about volume is in the pre-market. So if we don't hit, and it's typically like by 9:15 when I do my morning write-ups, right?
Mm-hmm.
Is if we don't have 150,000 contracts traded on the S&Ps, then like that kind of tells me like, okay, this is a slower type of day. And you'll see like even we might have like a 20 or 30 point like overnight range in the S&Ps, but we're at like 101,000 like contracts.
Mm-hmm.
So it's like today we were at 199,000 contracts at, I don't know, like 905 basically. So like that's like well within the wheelhouse. Like 150 is like the lowest. And you'll even like you'll start to notice if it's 127,000 contracts, like that's still kind of a slow day. And like you'll see how, and I mean, which we've right now been just like creeping over the last like 30, basically since I got out of the Russell right about here.
Slowly kind of just drifting, right?
Yeah, we've gone sideways. S&Ps have kind of drifted higher a little bit. Nasdaq's drifted a little higher. Dow's kind of drifting, but Russell's like completely sideways. So like when we have low volume type of days, that's when I want to avoid that. Like that's the only thing that volume kind of plays into for me is whether or not there's actually, like when you think about like a pool, right? It's like if I'm going to jump in a pool, like they don't put the diving board in the shallow end. It's like it just wouldn't make sense, right? So like if I'm going to get into the markets or I'm going to trade the markets on that day or even look to trade the markets on that day, like the first thing I want to do is make sure that the water's deep enough. You know what I mean?
Yep.
And not that my 5 or 10 contracts is really that important to the market because it doesn't care. But I just want to know that there's at least enough activity happening that I can step in. So
sure. That's something maybe that's on the outside that you use coming in that you drop. Somebody in the chat said, Eric, you get rid of the daily 200 easy.
That's actually
maybe
true.
from your community. Yeah, no, man. I think it's awesome. Again, I love watching guys that trade, guys and girls, because girls can trade too. Watching traders that trade with bare minimum on their charts. I really find that, and this is something that's held true for me. And back coming out of the overlaid indicators, 1,000 indicators on my chart. The more raw I keep my charts and the simpler I keep my trading, like all the way through, less levels, less VWAP, less volume, the better I tend to do. And I often ask myself, if I took everything off my chart, would my results be that much different? I really don't think they would be, honestly. The way that I trade, the levels that I identify, the areas of interest, I marked them for forever without volume profile. Volume profile just kind of acts as a little bit more of a confidence boost, but I don't think that I would really have that much different of results. So, and I also find that anytime I am trading, if I start to add something in, if I start to pay too much attention to maybe something that is really not a core piece, it's this added piece of information or some indicator, something. It tends to hurt me. It never tends to give me more of an edge or move me in the right direction or give me some kind of better read. So I always try to pull myself back to that. Like when I came over, I've caught myself doing it a little bit. When I came over to ES from Forex CFDs, right after stocks and crypto, I did that a little bit. I was watching what other guys were doing. It was definitely a learning curve coming over to like primarily U.S. indices intraday. I was way too confident coming from swing trade and Forex for sure. But I added a lot, and at a certain point on my chart, you can even see it from my live trading because I've been doing this on YouTube for like years now. I have like a lot on there. Like there's a lot of levels. There's opening ranges. There's multiple anchored VWAPs, and after a certain point, I was like, all right, this is getting to be too much. It's going the other way, and the results can show, right? It's negative. So I think for anybody listening in, that's a good question that you asked, man. If you had to lose something, right, from your trading, from your charts, what would you lose first? And think about whatever those things are. If you're not using it, and I talk to guys, people in the community, if you're not using something day in and day out, if it's not adding into your trading decisions, why is it there, right? Why is it on your chart? If it's not a real key piece that's helping you in your trading, you'd probably do better without it. You'd probably be able to focus a little bit more on the stuff that matters over spreading your attention on the stuff that doesn't. So that was a great question, man. Great question.
Well, this has been fun, bro.
Yeah, dude, we went on 2 hours here, man. This has been awesome. 11:25, dude. Appreciate you coming on. Before you get ready to go, tell the people where they can find you.
Yeah, so it's whether it's Instagram, TikTok, YouTube here, it's all just at Major League Trading. So wherever you want to reach out, feel free and shoot me a DM, slide in the DMs as the kids like to say. And yeah, it's been great, dude.
Awesome.
I didn't realize. How long do you normally go? What's your typical window?
This is on the longer end, man. We just had a good conversation, really good conversation.
Yeah.
But usually I let guests go, hour and a half or so, maybe a little past an hour, man. But no, we both had trades running, and it was cool to hear your whole system, and then breaking down Bookmap. I'll yap for way too long, but yeah, dude, I
was interested in that for sure. That was like I said, I'd never seen it before, so I appreciate that.
Yeah. No, dude, this was awesome. I appreciate you coming on. Hopefully I'll have you back on if you're up for it. A couple weeks down the road, we'll run it back.
Yeah, for sure. Let's see if we can pick another day like this. So we have a back-to-back bangers.
Dude, listen, if we can run it back where you hop on, take a trade, make money, I take a trade, make money, it's a good day. We'll see if we can run one of these again. But
I'm down for it.
Guys, anybody listening, Major League Trading on IG, TikTok, YouTube, across socials. Feel free to give Eric a follow. Somebody that's been in the markets for far longer than most, including myself, like double my time. Really, really cool way of trading, simple way of trading for a lot of you guys that are watching multiple markets. This is going to be the chat's blowing up with MLT. Solid discussion, great trading. Thanks, everybody. Chat's loving it. But yeah, anybody that's interested in correlation, divergences, and a really simple approach using levels, man, this will be someone to check out. So, Eric, thanks for coming on, man. I'll let you go. And chat, stay tuned. We're going to run a duck race. We're going to give away an account, but I'm going to let Eric go for this one. Thanks again, brother.
Sounds good. I appreciate you, bro. Have a good one.
Thanks. All right, guys. Awesome conversation, man. And W's. We got some W's in the chat, man. Awesome to see. Appreciate you guys from his community hopping on as well. Again, if you guys want to check out MLT Eric, Major League Trading across all socials. But don't go anywhere because it's about to be giveaway time. We are going to be giving away a Top 1 Futures Ignite instant funded 50K account. Run the likes up. Give me just 2 minutes, guys. I'll be right back. If you want to get ready for the giveaway, you want a chance to win one of these accounts, you got to be in the 100% free Discord. If you're new, if it's the first time on my stream, I'm happy to tell you I don't sell anything by way of courses or mentorships or anything. I trade live on YouTube, free 99. YouTube kicking X almost every damn day. My community is 100% free. Socials, all that fun stuff. I'm partnered and affiliated with brands like Top One. Happy to bring them to you. If you want a chance to win, hop in the free Discord. I'll be right back. Forms getting ready to drop, guys. All right, guys, back in action. Back in action here. Let's see. No, Discord link not working. Is it working? Somebody let me know. Somebody let me know. Let's see. Nah, Discord link's working. That's on your end, brother. So, guys, make sure you are ready in the Discord. We got the like count up, but I'm not even gonna ask you for anything, man. You guys can like, subscribe. You could do whatever you want. You don't have to do anything. Free means free. I'm just happy to have you guys on here, be able to get somebody funded, be able to have awesome conversations like we had today with Eric. You guys don't have to do anything. I hope you know that. You never really have to do anything, honestly. I'm still going to be here streaming whether you hang out or not, whether you hit the like button or subscribe or comment. Of course, it's always better when we get some good conversation, good questions. That was a good conversation. I know I didn't read the chat too much on that one, but I'll go back through as we're getting this form filled out. So it is giveaway time in the Discord. Let me go ahead and throw this up on the screen. It's giveaway time, guys. We are giving away a 50K Ignite instant funded account from Top One Futures. Fill the form out, which is in the main chat in the free Discord. The link is in the chat on YouTube, Kick, and if you're on X, go to my profile. Link is in my profile. Let me make sure this is all working. And we'll get somebody funded, man. We'll run a duck race. Yeah, this looks good. This looks good, Chatty McChat. I see responses rolling in already. Remember, guys, you only got a couple minutes to get the form filled out. Please don't fill it out more than one time. If you fill it out more than one time, I hope you step on a Lego barefoot. No, you're going to get banned from future giveaways and from the prop firm itself, so don't do that. If you spam the form and use your brother's and your mother's and your sister's email, you're going to get banned from Top One. Also, you got to be on the stream to win. You got to be in Discord, so you got to have an actual Discord name, and then you got to be on the stream to win. If you somehow win and you're not in Discord, I'm going to assume that you filled the form out multiple times. If you win and you're not in the chat on the live stream, I'm curious as to how you filled the form out in the first place. So that's the drill. Let's see, chat. What's up, guys? Okay, I'm funded. Cool. We're happy to have you too. Yeah, appreciate you guys, man. Link works fine. Filter scammers though, I think. Form is in the main chat, guys. Form is in the main chat in Discord. I don't have a lot of Discord channels. It's in the one that says main chat. So when you join, you get put in the welcome channel, like at most Discords. And then in the one that says main channels, probably the only one that's lit up for you, there it's the last message. It says live giveaway form 12226. I'm gonna give you guys about another 60 seconds to get it filled out. If I leave it up too long, then it definitely gets filled out too much. Zach, how you doing, man? Wanted to ask you about the giveaway on last Friday. Didn't get an account yet. Tommy, shoot, Tommy K1C4R, and actually anybody listening, if you want a giveaway from any of my streams or on X or on Instagram or anywhere, and you didn't receive it, please hit me up. I've had a handful of people I've had this happen to, either at my expense by entering their email wrong, or just Top One not sending the account in a timely manner. But everybody that wins gets an account. I definitely do not play that game where you win and you will never get the account. That's ridiculous. Especially if you won last Friday, because I think that's when Clay was on, the founder of Top One Futures. So shoot me a DM in Discord by clicking on my name in Discord, or shoot me an email to the email that I just put in chat, support@realdealfutures.com. If I don't remember and I can't figure it out, I'll ask you when you won, what day, and what your name is that you provided on the forum, emails and all that fun stuff. And then I will make sure that you get your account. But do me a favor, give me a good email, give me a good Discord name, give me a good whatever platform you're streaming from, because that's how I filter out a lot of the scammers, right? If you have 47 different emails and all that stuff, I won't go through it a million times. I've tried to not ramble on about it. But let's go, guys. 30 seconds to get the form filled out. Form is in Discord. I will put it in the chat one more time for you, those guys that maybe are just catching it right now. One more time, the 100% free trading Discord, and where the giveaway form gets dropped, just so I don't drop it completely openly on YouTube. So then it really just gets spammed out. Let's go. Last chance, guys. And we're going to run a duck race. And for those of you that don't know, the duck race is just a random number picker. It's not it's not anything too exciting. Well, I shouldn't say not too exciting, because you guys seem to love the ducks. The people yearn for the ducks. All right, responses are done. Form is down. No more responses. That's part of the game. You got to be here on the live stream for a chance to win. I only leave it up for a couple minutes. Try to reward those that are hanging out on the stream with me. Let's go through, make sure nobody scammed it. Yeah, we're good. Remember, guys, you have to be on the stream. As it says on the thing right here, you have to be on the stream to win. So a lot of you guys are starting to put like NA or none for YouTube or Kick. If you're watching from X, put down an X username, because I'll check X, but you're going to have to be in the chat somewhere. You can be on whatever platform you want. We're non-discriminatory on platforms. You can watch from YouTube, Kick, or X, but you're going to have to say what's up in the chat if you win. Fair warning. Otherwise, we rerun the duck race. Goes to somebody else. All right. We have 100 ducks in a row. 100 ducks today, guys. Let's get ready to run it. Remember, guys, if you don't win, don't be too sad. We run giveaways here almost every damn day, 100% free. On YouTube, Kick, and X, the streams are free, the giveaways are free. You don't have to buy anything, you don't have to use a code, you don't have to do anything, man. You just hang out and get funded. I have had multiple people get funded more than once, and now I have had multiple people take payouts from accounts that they've won. So it's fun to do the giveaways. It gets everybody hyped up, right? Obviously, there's an incentive for me to do it. There's more viewers. All that stuff is great. But I genuinely do like to give back. And not only is it fun to give back to get people funded, get them a chance to like make some money, to actually have traders taking payouts, making money from accounts that they spent $0 on. I love it, man. I love it. I think I've had 3 now. I think I've had 3 that have shared in the Discord that the account that they won on the, for free on stream and have gotten paid out, man. So not everybody just YOLOs these. All right, guys, let's run it. Good luck, everybody. 3 minutes on the clock. Best of luck. Best of luck. We'll see who takes the W on this one, man. And as you guys are hanging out, on the stream, remember, you don't have to wait to win a duck race to get the best deal at Top 1 Futures. Link is going in the chat right now. Some of you guys might not know about Top 1 Futures. Check this out, man. They have, in my humble biased opinion, because I'm partnered and affiliated, I'm going to show this tab real quick, the best prices, the best rule set, the best damn near everything for an instant funded account in the futures market. If you want to check this out, put them up against the competition, put them up any of the other firms that you trade with, please do so. I would encourage you to do so. They are now over 21 million paid out to traders, but they just dropped 60% off, and as other firms are shutting down, closing up shops, we watched a meltdown this weekend, or not a meltdown, but just a close up shop. Other firms are changing rules, making it harder to get paid out. Top 1 Futures is widening out the rules. They are having positive rule changes now. They rolled out really, really aggressively. They had to make some changes, some stuff that I wasn't super psyched on. They've continued to improve the program now, so much so that they have a max loss limit of 4% across all accounts for end-of-day trailing drawdown, copy trading allowed, some of the best profit targets to payout ratios in the space. I would encourage you to check it out, man. 60% off is absolutely wild. That's for your first or next trade of 8 account. After that, it's the 40%. But code RDF gets it done. Link is in the chat, man. Link is in the chat. But yeah, the current pricing, current discount is mad, bro. Current pricing is absolutely insane. $375 for a 150K account with $6,000 of drawdown, not $4,500. $9,000 profit target, and you're taking out $3,500. Instant funded, end of day trailing drawdown, 20% consistency, standard, fast payout. If you hit a payout, I don't know what else you need, man. Trade of 8, Ninja Trader, TradingView. I don't know. I don't know why you would be wasting your time at other places, but maybe you trade evals, maybe you want, no consistency in funded. Maybe you trade a specific platform, right? There's other things. Decide it for yourself. I can only talk about what works well for me, what I think is a good opportunity. But, of course, I'm biased. Head to the site, look at the rules, put them side by side. 16 seconds to go. We've got a whole bunch of ducks out here. Number 15, Duck Kim ZE in the front. Tushar, Time Pass Core, Jay, Ham, Tony up top. Oh, what do we got? Time Pass Core was asking questions in the chat. Let's see. Hang on, guys. And remember, don't go anywhere just yet. I see we got a bunch of questions in the chat. So I'm going to read some of these, man. If you asked a question, feel free to hang out while we give Time Pass Core a minute. Hang on. We're going to share the promo tab. W's in the chat. Let's see if he or she is here. Let's see. Where you at? There you go. We got a winner. It's me. Congrats. We got hella W's in the chat. There you go. Awesome. I saw a couple questions. Not the best trading conditions for me today. Took a break even short on ES. Decided to call it a day. Nothing wrong with that, Cyrus. Current discount is mad. Yep. Username is Wilson69, but I missed it. No problem. Yeah, I got you. Thank you for putting that in there. Awesome, guys. Hella W's in the chat for actually both of us too, because we took some W's. Eric took a little W. I took a little W. We got somebody funded with a fresh 50K Ignite instant funded account from Top 1 Futures. Again, guys, if you want to check it out, link is in the chat. Please feel free. It's pinned to the top of all the chats as well. Code RDF gets you the deal if you want to support yourself, support your boy, support the channel. But don't do it for me. Do it for yourself. Feel free to check it out, man. But as always, do your own research. Put these firms side by side, right? Consider everything: longevity, reliability, the platform, the pricing, the rules, consistency, and make the decision for yourself, right? Prop firms are a risk in general. Always, obviously, like everything in trading is a risk. Weigh that stuff for yourself and decide what the best move is. This was an awesome session, dude. We ran long. 2 hours and 20 minutes. This has been great, man. Hope you guys have been enjoying the guests. We have had a lot of guests on. We've had MLT Eric this week. We've had Trader Drysdale this week. Past weeks, we've had Luna Trades. We've had Tanner. We've had Decipher the Algo on. We got more traders coming up next week. I will be back live with you guys, solo here trading. We're going to see if we can't keep some green rolling because we got a little bit of a bounce back going, chat. I don't know. Green today, green yesterday. Small, nothing big. Taking my profits, building back some momentum, building back a little bit of that momentum. We'll see what we could do. But as always, guys, remember, quick disclaimer, I'm not a financial advisor. I do not provide financial advice. Nothing I say or do is a suggestion or recommendation to do anything. Trading is extremely risky. Most traders lose money. If you trade, you're a crazy person because you're probably going to lose all your money like everybody else. Make sure you read CFTC Rule 4.41 on simulated trading, which is what this is, even in funded prop firm accounts, and the affiliate and partnership disclaimer. This is I stand to make money from links and codes in my content, like Top Up Futures, Code RDF, Bookmap, Edgeful, and others. Appreciate you guys hopping on. I'll see you back here tomorrow, live, 9:15 a.m. Eastern, free 99 as always. Have a great rest of the trading day, guys. Trade safe, structure your risk, structure, accept, and manage that downside. Talk to you guys soon.